Good morning and welcome to the VSA Capital 5-Minute Morning Miner. It's 1st of March. It's St. David's Day. Start of spring. Doesn't feel like it outside. It's raining a bit of a wet ride in on the bicycle today. It's a tube strike, so just as well I do cycle. What about you, Paul? What are you doing? Are you staying at home or are you going to manage to come in somehow?
No, I'll come in. My overground line is operating with good service, it says, so I'll come in. It's also Pancake Tuesday, Shrove Tuesday, so I'm looking forward to the pancakes tonight.
Very good. I will be actually on the M4 and the M5 tonight, heading down to Cornwall as with Ollie, because obviously we're doing a little bit of a tour of a load of the Cornish mining projects. Tomorrow is Cornish Lithium and British Lithium. So there we go. Anyway, news today. Obviously, it's still all about the war in Ukraine, which is becoming pretty awful, frankly, and it's obviously going to change the way the world thinks about Russia, certainly. I think we'll be doing business with Russia for a long time now, which is going to change the shape of the mining industry. But Paul, what do you want to talk about this morning?
Well, that being said, and given the sharp fall in the share price of Polymetal over the last couple of days, it's too bad because they put out a real nice update on reserve and resources statement here. They've recalculated the reserves and resources to a $1,500 an ounce gold price and a $20 an ounce silver price. So reserves are up by 7% or 2 million ounces year on year to 30 million ounces gold equivalent. And they've also said that the average grade of their ore reserves year on year is down by 7% to be at 3.5 grams per ton gold equivalent overall. For exploration for this coming year, they plan to put out a new ore reserve estimate at their Vaduga mine project, to also put an initial ore reserve around their Talgi deposit at Albenzino, and a new mineral resource estimate on the Doranenskaya area, which is their Dukat silver big mine there in Russia. So it isn't a bad looking operational outlook there. It's just too bad it's not investable at the moment.
Unfortunately, I think it'd be fair to say that probably no Russian stock is investable now. You don't want to have a nice portfolio of be acting for a load of Russian stocks because it's all going to go away from you. I think there is one broker out there that has a rather large proportion of Russian stocks, but there you go. What else, Paul?
We had a statement out here from Hochschild Mining, which is a London-listed Latin American base metal producer, but this is about their SNP gold mine joint venture in BC with TSX-listed Skeena Resources. That's a big resource upgrade there for the past producing underground mine at SNP. And it now comes in with a 3-gram cutoff grade estimate at indicated 2.5 million tons at 10.5 grams gold, and inferred resources of 2.2 million tons at 10.3 grams gold per ton. So for a combined 1.5 million ounces at over 10 grams, that's definitely a mineable deposit. So they've got 10,000 meters of new drilling that they'll put in for extensions and infill drilling as part of a PFS study that they now have underway. It's not a question whether it'll be economic or not, and it will be. It's just a question now how they design it.
Yeah, there's not much news out on the London markets for mining, is there, today?
Well, like I say, Hochschild was London listed. Polymetal is London listed. We also had a bit of news out, for instance, from Beowulf Mining, which is the outfit that has the Kallak iron deposit up in Scandinavia, but also does base metal exploration in the Balkans. And they said that they put another 200,000 pounds in working capital into their exploration subsidiary, Vardar Minerals, there in the Balkans. And as a result, they've taken control of that now, holding over 51% of that firm now.
I see also that vanadium has now hit $11 Yeah, I find it really quite surprising that ferroalloys and Bushveld really aren't responding to this price rise in vanadium. It's quite surprising. I don't think it's necessarily a long-term uplift, but that is, it's had quite a move, and equity prices aren't following. So maybe one for investors to look into.
And that would be correct, but just remember too that the more expensive vanadium becomes, the more problematic it becomes on the economics in the short run for capex for vanadium redox batteries. So you would hope that there is some restraint, I guess, but some predictability on long-term pricing around vanadium as we go forward for the benefit of the battery sector, I would say.
I think you're correct there, Paul. I noticed also that, and long overdue, but Camel Central Asian Metals is having a bit of a run today, actually up 9.5. But obviously it has come back a long way. I mean, it was trading up in the sort of 260s, 280s this time last year. Now trading at 218, but probably quite correctly having a little bit of a bounce there. I think that's about all, isn't it, Paul?
Yes, pretty much so, I would say, for today.
All right, I will probably speak to you from Cornwall tomorrow.
Very good. Well, I'm on holiday next 2 days. You got Ollie.
Well, Ollie will be driving to Cornwall, but we'll sort something out. All right, very good. Thanks.
Very good.